Thank you, Brian.
Hey, good morning. Thank you. Since the 1980s, the Rent Guidelines Board has been conducting the mortgage survey, which gives a sample view of the lending market faced by borrowers. The board is required by the rent stabilization law to consider the costs and availability of financing in its deliberations. In compliance with the law, each January we send out surveys to financial institutions that underwrite mortgages for multifamily properties in the city. The survey covers 4 main areas: new and refinance loans, underwriting criteria, non-performing loans, and the characteristics of buildings in lenders' portfolios. The survey findings are collected in the Mortgage Survey Report, which highlights changes in the city's multifamily lending market during the prior year. And the report itself is divided into 3 parts. In the Mortgage Survey Analysis, which looks at all the respondents; a longitudinal analysis, which looks at only those lenders responding in both the current and prior year. And in addition to our survey analysis, we also examine rent-stabilized building sales data from the prior year. Each winter, the Rent Guidelines Board surveys institutions that offer loans for multiple dwelling rent-stabilized properties in New York City. The survey is updated each year to include only those institutions that continue to offer new and/or refinance mortgages. There were 11 responses this year, down 1 from last year, which were received from 27 surveys mailed, 41% participation rate this year. Before going into detail, here is a brief summary of our key findings. Interest rates charged on loans decreased. Upfront service fees, sometimes called points, for mortgages declined to a record low. Vacancy and collection losses also decreased to a record low. Lending volume for both new and refinance loans increased. Maximum loan-to-value ratios declined. And in our analysis of building sales data, the number of rent-stabilized buildings sold in 2018 increased. Average interest rates decreased this year. This year's average interest rate for multifamily mortgages fell to 4.65%, an 18 basis point or 4% decline, and the first decline in the survey in 3 years. This graph shows average interest rates charged for new mortgages over the period since 1981. And like all the graphs in the presentation, they are also reproduced in the report itself. The graph illustrates that interest rates were once significantly higher, residing in the double digits throughout the 1980s, then fell to single digits in the 90s. 3 years ago, average interest rates declined to their lowest level in this survey's history, and then rose the following 2 years. This year, however, interest rates declined again, falling to an average of 4.65%. Points, which are upfront service fees, fell to a record low this year. The average service fee charged on new loans by lenders was 0.38, a 6 basis point or 14% decrease from last year's 0.44. Among survey respondents, they ranged between 0 and 1, with 5 surveyed lenders charging no points on new loans. Now, this graph shows the average points charged for new mortgages since the early 80s. After averaging between 1 and 3 points in the 80s and 90s, average service fees have been at or below 1 point for the last 2 decades. This year, fees charged by lenders fell to 0.38, the lowest level recorded in our survey. The average volume of new mortgage originations in our survey rose from 43 last year to 94 this year, a 116% increase, in part due to the addition of 1 large lender in this year's survey. Totaling up the number of new loans reported by all the surveyed lenders, it was 1,031 this year. In addition, the average number of refinance loans rose, but more modestly, rising from 53 to 57 this year, a 7% increase, and totaling up the number of loans, refinance loans made in the survey, it equals 622. Yes?
Brian, I don't remember this in the report. Do we know what percentage of the housing stock, I'm trying to understand the ratio of, so what percentage of the housing stock was sold, and then how much of those that are sold are we seeing in this data about new purchase mortgages?
Well, it's really tough to compare because these are new mortgages, but you know, they also include, we're reporting refinance mortgages, but then we also have the building sales, and we don't have corresponding information with the number, with mortgage information from there, so.
But, so what's the total number of building sales?
Yeah, I'd have to, I mean, we report the number of buildings, I don't have the number of units in the report, so I'd have to look at that,
Okay, thank you.
yeah.
One other question. These are just rent stabilized apartments, or these are anything the lender did?
This is, the lenders are reporting, we ask them to report on rent-stabilized buildings. We don't specify anything beyond that in terms of them counting the total number of buildings. It's possible. Yeah, we don't know for sure. I mean, I think they may not include that. It's up to them. This year's lenders, on average, maintain lending practices similar to last year. For all institutions, the typical maximum loan-to-value ratio, which is the maximum dollar amount respondents were willing to lend based on a building's value, ranged from 60 to 82.5%. This year's average was 72%, a decline of 1.5 percentage points from last year's 73.5%. And the debt service ratio, which is the NOI divided by debt service, rose slightly from the prior year, from 1.21 to 1.23 this year. This graph illustrates lenders' standards for maximum loan-to-value ratios over the last 24 years. This year, the LTV ratio fell 1.5 percentage points from last year to 72% this year. The survey asked lenders whether their lending standards differ for rent-stabilized buildings versus non-stabilized multifamily properties. Where respondents were asked whether their new financing rates, refinancing rates, loan-to-value ratios, and debt service coverage requirements for stabilized properties were higher, lower, or the same as for other properties. The majority of lenders reported no difference between stabilized and unregulated buildings in those categories. The number of lenders that report that they have non-performing loans was about the same as this year, with 2 lenders reporting that less than 1% of their portfolios were non-performing, compared to 1 lender last year. In addition, like last year, just 1 lender reported foreclosures in their portfolio this year, which also represented less than 1% of their portfolios.
I'm sorry, Brian, is non-performing equal to foreclosure, or does it include 90 days late, or, you know, what is the definition of non-performing?
We don't specify in it. I believe non-performing is, yeah, Delinquencies, I can't, yeah.
Okay, thank you.
The size of buildings in surveyed lenders' portfolios varies widely. The most commonly reported building size is 20 to 49 units, with 36% of lenders reporting this size as typical, while 27% report that their typical building is 1 to 10 units. Another 27% report it's 50 to 99 units, and 1 lender this year reported that their typical building was 100 or more units. Average operating and maintenance expenses and average rents among buildings in lenders' portfolios both increased this year. Average rent per unit per month rose 16% to $1,482 this year, while expenses rose 22% to $727 this year. Because the average expenses increased more than average rent, the average O&M cost to rent ratio rose from 46.7% last year to 49% this year. Average vacancy and collection losses decreased for the 8th time in 9 years, down from 2.83% last year to 2.59% this year, the lowest level in the history of the survey. All but 2 surveyed lenders this year reported that their buildings in their portfolios contain commercial space, though the average number varies depending on the lender. On average, lenders report that 25% of their portfolios contain commercial space, compared to 35% last year. This graph illustrates vacancy and collection losses over the last 24 years. Vacancy collection losses have fallen over the last 6 years, the most recent years on top, and that includes this year when it declined to 2.59%, which is a record low. The survey asked lenders about their performance of their portfolios compared with expectations at the time of initial loan origination regarding NOI, debt service coverage, and expenses. A majority of lenders reported that their expectations had been met or exceeded in all areas among the rent-stabilized portfolio. Specifically, at least 82% said that this year their expectations were equaled or exceeded among all three categories. It's about the same as in the prior year. The survey asks lenders whether they retain their mortgages or sell them to secondary markets. 3/4 of lenders report retaining all their mortgages, about the same proportion as last year.
Brian, on that last point, do we have a sense of whether that's representative of the multifamily market in New York, that 75% are kept in portfolio, or do we not know?
Beyond the survey, I really can't say. I don't know how representative that is, I'm afraid to say. Yeah.
Thank you.
Next, we'll move on to the longitudinal analysis, which examines findings among institutions that responded to our survey both last year and this year. Among the 11 respondents that completed the survey this year, 10 also responded last year, and these are the lenders that make up the longitudinal group. And we look at their responses and compare them to illustrate the changes between the 2 years. In contrast to the main survey analysis, when the average interest rate declined, the longitudinal group saw interest rates rise. Interest rates this year averaged 4.72%, an increase from the prior year when the average rate was 4.68%. Average points offered by lenders in the longitudinal group also increased from last year, rising from 0.33 to 0.42 this year. And this is a difference from the main survey analysis when average points declined. The average maximum loan-to-value ratio declined slightly, falling among the longitudinal group from 73.3% last year to 71.8% this year. The average debt service ratio declined, down from 1.23 to 1.21 this year. Vacancy and collection losses among the longitudinal group declined, falling from 2.6% to 2.55% this year. And looking at the rate of delinquencies, 2 lenders reported non-performing loans, the same as last year, and 1 lender reported foreclosures, compared to 2 in the longitudinal group last year. Next, we'll move on to the analysis of rent-stabilized building sales data obtained from the Department of Finance. In 2018, 885 buildings containing rent-stabilized units were sold in New York City, 12% increase from the prior year. Looking at sales data by building size, sales change varied. Among the smallest size rent-stabilized buildings in 2018, which contained 6 to 10 units, sales volume was up 2%. Among 11 to 19 unit buildings, it grew 12%. Among 20 to 99 unit buildings, sales volume increased 22%. And among the largest buildings, containing 100 or more units, sales volume rose the most, up 38%. Looking at sales by borough, sales volume increased in each borough except one. Sales grew the most in the Bronx, rising 25%, and in Manhattan, increasing 24%. Sales also rose in Queens, up 7.1%. However, sales declined in Brooklyn, down 3.8%. And as in prior years, Staten Island is not included in this analysis because there are too few rent-stabilized building sales in the borough. Now, this graph illustrates that over the 16-year period for which we have data, citywide sales were at their peak in 2005, with 1,816 buildings sold, and at their lowest in 2009, with 521 sold. Following 2 consecutive years of decline, sales rose again in the most recent year, 2018, by 12%. And now we'll shift to an analysis of sales prices of buildings. The median...
I'm sorry, Brian. So there's 884 sales, and your survey picked up how many purchase money mortgages? It picked up...
I think more than that.
But that includes refinances or doesn't include refinances?
Let me see. The refinancing rate, we count separately.
I think there was 1,031.
And so how would that, I'm just trying to
I'm
understand
not
how that
sure
would be.
if you can,
Oh, so it's not new mortgages, it's just, so it's just mortgages in their portfolio? Right, so,
it's supposed to be newly issued, new origination, so this year it didn't square. I'm not sure how you can account for that.
so just to understand, so we're seeing, we have a survey of 1,000 buildings.
But I think the survey includes, they can get a new mortgage on, I guess, on a already existing, something that was purchased previously.
Well, that would be a refinance, right? Wouldn't that be defined as a refinance?
Current mortgages that are refinanced, current mortgages are refinanced for purposes of cashing out or getting a lower rate or, increased rate. But new origination ones are purchases.
Just for purchases? Okay, so I'm not sure how you can square the numbers in this case. This was the first time that we noticed that.
So you've, just so I understand, so in the past years, this pattern didn't persist, it's just.
It was
that we
always
didn't pay attention
more
to it?
sales than the number of mortgages in the survey.
This is the first time that we've seen
Yeah.
that? Okay,
It's
just
possible
odd.
that the count that they provided as to the number of rent-stabilized buildings sold, I mean, mortgages issued may not be correct, or, I mean, I think the data of the building sales data is probably more reliable because that's actually the total number reported.
Okay, so they may be over-reporting
Yeah.
their multifamily portfolio.
Possible, yeah.
Okay, got it.
So they could be, they're probably including also the refinance, and they're also labeling as a new rate.
It's possible, yes.
So if we can clarify that.
I mean, it's tough to get survey respondents' information. I mean, it's tough for them. Most banks are reluctant to even do the survey, and in terms of them counting it up, I'm not sure if it's an estimate or an actual count of each mortgage issued. So, I mean, it would be useful to get that more clarified. Definitely now that we have the discrepancy with the sales data, we'll keep an eye on that for next year, I think, in terms of what they report.
Refinance could also be interpreted as new loans.
So, do you know what portion of the universe of rent-stabilized buildings is represented by the survey of the banks? Like, is there what percentage of the overall stock is represented by their portfolio of those 11 or whatever?
I mean, I think it's. I know there's certain banks that are large in the mortgage in the multifamily lending market. I mean, we asked this in the survey. One of the questions is we asked the lenders who their competitors are, and some of those banks we're not able to get responses from. They just refuse to do the survey. So I know we're missing some of those. And then there are some alternative lenders that aren't necessarily banks that provide lending that we don't get as well. So
I guess it would be helpful, I think, if you could show like the aggregate number of buildings that are represented in the survey as opposed to just the average number.
well, we do have the total number.
It is in there.
We do report on the total number of buildings. It was. We did say, and it was, I don't think the number is in the report itself, but if you total up in the appendix, appendices, number 1, I mean, if you total up the number of new loans, the average is 94, but the total number was 1,031, which was in the presentation, and the total number of refinances was totaled 622.
I'm sorry, where is that again, Brian?
Those numbers were in the presentation. They're not in the report, but they're calculated by, if you look at appendices, Appendix 1, under the new volume and refinance volume columns, if you total up each of the institutions' number of loans, it adds up to 1,031 for new and 622 for refinanced.
Got it. Brian, could you circulate the survey that's in Appendix 6? Could you just circulate that as an electronic thing so we could just take a look? It's just easier to read?
Oh, I know this print is pretty small, so we can do that.
Thank you.
Just, so the numbers that you just gave us are buildings, not units.
Yes, the survey doesn't count, there's nothing about units in terms of the loans.
And there's no way
We do get the average, we do have a question about the average size building in their portfolio, but I don't think it would, I think it would be prohibitive for most of to get survey responses if we asked for every single building in their portfolios for them to report the number of units. Yeah,
Versus buildings.
right. But if you, I mean, we do have the average building size for each of the respondents.
I just have a question on the comparison of building sales. Do we have this information in units?
Building
sorry.
sales,
Explain it.
Unit sales?
we do have that in the file. We don't look at it that way, but it is available.
Scott, just so I understand, what are you asking?
Just like to see how many units. You know, if you have 100 units, if you have 100 unit buildings that sell one year, and you have 120 unit buildings that sell the next year, you'd still have 100 buildings selling a year, but you'd have very different numbers of people impacted.
I mean, you had one year, or at least, well, a couple of years, you had like Stuyvesant Town with thousands of units, 11,000.
Yeah, we can get you that data, that's not a problem. Yeah. We can, we can go back, right, Brian, all the way to,
We can go back.
we can go back to '03 if we want and give everybody, I think, did we do that last year?
Yes, we've done it before.
We've
looked
done
at
it
that.
before, we can update whatever we did in the past, yeah. Sure.
That really shows more, are there more sales occurring or not?
Right, okay. We can start to include that as part of the report as well, going forward, yeah.
Just so that I'm clear, in the longitudinal analysis, when you say 10 reported from last year, it's the same 10 posts, same 10 lenders reporting.
Right. 10 of the 11 respondents this year also responded last year.
What's our approximate number of rent-stabilized buildings in the city again?
Buildings, I don't have that
Just trying
offhand.
to figure out approximately what percentage of this.
Right,
HCR will discuss that
Okay.
after me, I guess.
no, actually, we have that data from, when we do the price index, we do the tax data, we have the number of buildings. It varies from year to year a little bit, but it's about 39,000 buildings. So maybe that is answering your question, Alex, is like what percentage of the buildings? So it's, you know, if 1,000 buildings are sold out of that 39,000, but I can get you the exact number of
Yeah,
buildings.
I guess another question I have is, do we know what number of buildings they have in their portfolio, even if they've not originated or refinanced a mortgage? They may have, you said they hold 75% of the mortgages they originate in portfolio. Do you know, like, how many buildings they've lent to that they currently have in their portfolio as opposed to just new mortgages?
No, we don't ask about that. We just
Okay.
ask for the snapshot of the year.
Okay.
Does the board have any comments or questions? Board
I'm not
members?
done yet.
Oh, I'm sorry, Brian, I'm sorry.
Sorry, I have a clarifying question to something you just said, Andrew. So you said there are 39,000 buildings. Do you have from the Department of Finance, correct?
Yeah, it was from finance, yeah.
Do we have how many units they say they have?
We could probably get the total number of units in that, but that's going to include, you know, buildings that have deregulated units as well are in it. So it's everything that's in that building. If we take buildings that have at least a stabilized unit in it, so it's going to include deregulated units as well. And I can't get to the difference between those two. You know, it's over 1 million. It's more than, you know, what it's going to register with the HCR because there's deregulated units, and it's also more than the HVS because the HVS is just counting stabilized units. So it's certainly more than both of those.
Okay. We'll shift. I think I started talking about sales prices of buildings. The citywide median sales price in 2018 was $4.4 million. The highest median sales price was in Manhattan, $7.2 million, followed by the Bronx at $4.6 million, Brooklyn, $3 million, and Queens, $2.1 million. Looking at sales prices by building size, the smallest buildings containing 6 to 10 units, the median sales price citywide was $2.1 million. Among 11 to 19 unit buildings, the median price was $5.1 million. Buildings with 20 to 99 units sold at a median price of $8.3 million. And among the largest buildings, which contain 100 or more units, the median sales price was $78.9 million. So, to sum up this year's mortgage survey report, average interest rates declined, and both service fees and vacancy and collection losses fell to their lowest levels in the survey's history. In addition, interest rates and service fees among the longitudinal group rose, and the total number of buildings sold, rent-stabilized buildings sold, increased from the prior year. Thank you.
Thank you, Brian. This may exist in other reports, but do we kind of have a measure of churn? You know, so this is kind of relating to the things that we've been talking about now, like, so this % of the housing stock, either defined by buildings or units, turns over every year, and then here's like the 5-year trend. Do we kind of know how many buildings effectively have new owners as opposed to maybe longstanding owners? Is that something we have or easy to do?
It's not something we have. We'd have to think about it. It's something we can do, but we don't have it. But.
Comments or questions by the board? Okay. Thank you, Brian.
Thank you.
Okay. Thank you. So the Rent Guidelines Board is very grateful to Deputy Commissioner Woody Pascal from New York State Homes and Community Renewal for coming to speak with us once again. Your presentations are always very helpful to the deliberations of the board. Would you like to introduce your team?
Sure, absolutely. First, let me start by saying, I don't know if you can all hear me. Good morning. My name again is Woody Pascal, and I am the Deputy Commissioner for New York State Homes and Community Renewal's Office of Rent Administration. First, let me begin by saying we look forward to continuing to work with all of you. And Mr. Chairman, congratulations on your recent appointment.
Thank you.
And I know there are a couple of new board members here also. Congratulations to all of you. Our city greatly benefits for your selfless and public servants just as yourselves. And on behalf of Commissioner Ruth Ann Visnaskis and HCR, we thank you. Chairman, members of the board, I thank each of you for the opportunity to both provide you with an update on recent activities at the Office of Rent Administration and for allowing New York State Homes and Community Renewal's Office of Rent Administration to be part of the process leading to the promulgation of this year's guidelines for rent-stabilized apartments in New York City. So before I go into my formal remarks, I'd like to introduce to you my colleagues at ORA. First, on my far left, Mr. James Ferrer, who serves as my special counsel. On my right, Ms. April Gray Gutierrez, who's our Deputy Bureau Chief of the Property Management Bureau. On my immediate left, Mr. John Lance, who is the Bureau Chief of Luxury Decontrol Overcharge Bureau. And of course, on my far right, Mr. Mike Berrios, who's worked very closely with the staff here, who's my senior advisor, and I'd like to thank all of you for your years of dedicated service. Thank you.
Woody, before you head out, we do have the answers to the questions that we posed, so those were passed out to the board members. So you guys have those?
Yep.
And I just want to recognize Michael. He spearheads all those, and it's much appreciated. Thanks, Mike.
Thank you. So as you may be aware, our office is in the process of replacing ORA's 35-year-old historical update tracking system with a new state-of-the-art system. As you can imagine, the process is complex and thus involves considerable amount of the agency's staff and time, not just that of ORA, but throughout HCR. ORA staff members continue to be diligently working with the Office of Information Technology Services to develop a system that is responsive and user-friendly. When complete, we know that online services for both tenants and owners will be faster, better, and more efficient than ever before. It's the hard work that has enabled HCR to launch this year in February, New York State Rent Connect. Rent Connect is a new online service and self-help assistant that modernizes and simplifies how tenants and owners of rent-regulated apartments interact with ORA. Rent Connect allows tenants, representatives to complete applications online, attach evidence, and submit completed applications for the following case types: lease violations, overcharge, defective conditions in apartments. Also, tenants and tenant representatives will be able to provide responses to open major capital improvement cases online. and tenant owners and their representatives can estimate the impact of an MCI increase on the monthly rent amount using Rent Connect's online tool called the MCI Payment Estimator. Owners continue to be able to access and to use our annual rent registration online services, petition by owner for high-income rent deregulation, high rent decontrol, and owner's application to restore rent. Rent Connect Assistant is our self-help wizard for tenants, owners, and their reps to obtain records, find current rent increase information, access forms, and easily find general information and answers to questions. ORA remains the largest customer-facing part of New York State Homes and Community Renewal. We continue to take steps to improve our interactions with New Yorkers. ORA staff regularly attends outreach meetings organized by members of the legislature, our partners in government, and other interested parties. ORA also now has well over 24 documents translated into various languages, including our lease writer, so that tenants can better know their rights. Our fact sheets, operational bulletins, advisory opinions, all of which are now easily available on our new revised website, provide clear and comprehensive information to the public. We have recently revised some of our fact sheets, and I expect that additional revisions will be forthcoming. We have continued to work to eliminate some of the legalese, and most importantly, by including concrete factual examples demonstrating the application of the principles discussed in our fact sheets. We believe that we've come up with documents that will truly help owners and tenants navigate the often arcane world of rent regulation. So I'm going to summarize by saying, on behalf of Commissioner and CEO Ruth Ann Vesnaskis and HCR, I wish you all success in your difficult deliberations and offer you ORA's continued support and cooperation. Thank you.
Thank you. You ready? Start.
Hi. I have a few questions about how long stuff takes right now. For example, like they were in 2008, 246 heat and hot water complaints filed, 50 were granted, 35 are still pending. I'm assuming the rest were denied. How long does the process take between when it's filed and when you guys actually go out and do inspections?
Are you talking just about the heat and hot water complaints?
I was going to go down the list.
Well, heat and hot water is a little different. For you to get a heat and hot water complaint, you've also had to file something with the Department of Housing Preservation and Development. So we go into
We go into
website.
HPD's website. You have to have an outstanding violation filed with the city of New York for us to process the heat and hot water complaint. And for all intents and purposes, while there are times that we do send out the inspectors, it's usually based on the fact that there's an outstanding city violation because they've already sent out their inspector and found a lack of heat or hot water.
And that's by statute.
So right now, if someone has a violation, you guys are granting that application if it's a violation that was issued by the HPD?
Correct.
So how long does it take for rent reductions of individual apartments when they're filed for them to be granted or denied?
I think that was already in here. Did we do that before? Just check. Yes.
I don't think you guys have anything on there. They don't answer that.
Services. No. 44. Well, doesn't have a time. Yeah. The overcharge is there. That's overcharge services. It was here. So give me just 1 second.
So maybe what we'll do is we'll get you that information on the average processing time for individual apartments.
I'm going to ask the same question for all of the remaining categories.
We can get that information for you.
Yeah, number 43. Oh, that's for the overcharge, though. Yeah. Okay.
43.
The average processing time is 6 to 9 months.
Can I ask a question about MCIs? So what percentage right now of MCIs in any given year for like 2018, 2019 or really 2017, 2018, because that's what a full year would be, were, like what percentage of buildings were impacted by MCIs? And then do you have that data by units? Just so that we can get a sense of how many buildings overall in the housing stock that you guys administer are impacted by MCIs. I'll ask the same questions for IIs. And I think you have a pretty good breakdown already in the answers for preferential rents.
You want total number of units? Total number of buildings?
Mm-hmm.
What was the other one?
Oh, that was it. You already did preferential rent. I think you answered that's pretty detailed. And then I would like to ask a question about harassment. Can you define what the definition according to statute is, define harassment if a tenant is claiming harassment? How long is the process? And then I think you answered the question of how many cases were filed and granted.
I'm sorry, you wanted to know how many have been done in addition to the definition?
I mean, how many were filed is
Here.
there.
Right.
I just, the how long it takes to go through the process is the other question, the additional question.
Which is also there. For the most part, they're done within a year. So harassment complaints in and of themselves usually get settled by the agency with the landlords and the tenants working out, at a conference. So last year, I think we actually only processed one complete harassment case because usually the owners will settle and pay a fine. Otherwise, the repercussions are much worse. So for all intents and purposes, they settle and pay fines. I'm not sure the exact number of fines that we've gotten in the last year, but the overall amount, as they noted in number 41, 25% of the cases, there's no harassment finding. In 70% of the cases, the unit's intervention results in a settlement, and there's less than 5% in which the conduct wasn't properly addressed, and they actually had to go to a hearing on the harassment itself. But the definition of harassment for the agency is defined by statute, so it's a little different than what a lot of the New York City agencies use.
Do you mind defining it for us?
I'll have to pull that up for you. 25. Mhm. Oh, yeah, the fines. Yeah. What number are you on? Okay. Right, so in 2018, there were 86 orders issued, and the penalties were $458,850, which were for both harassment and noncompliance.
as Mr. Lance is taking, searching for the harassment definition, is there anything else you want to add?
So because we got it so late, can you guys talk a little bit about hardship? Landlord hardship and how many applications you guys received, how many were granted and how many were denied?
It's at the end. Mhm. Okay, so there were no hardship applications filed in 2018. No applications were granted in 2018 and so far in 2019. And currently, we have 2 applications pending.
And can you talk a little bit about the process for a landlord to apply for hardship? Yeah.
It takes, well, the actual process for it, there's a lot of different pieces that go to it, and they have to not be making, I believe it's more than an 8% profit. So for all intents and purposes, it's not really utilized much by landlords, that process itself,
And why is it that percentage? Like what?
by statute.
I'm sorry, just so I understand, so hardship is defined as making less than an 8% profit based on, so what is the statutory definition of profit?
I'm not sure we. Mm-mm. It's not we don't have a statutory definition
Okay.
of profit.
But the 8% figure, like what is, it's 8% of your net operating income, or do we, I hadn't thought about it, so I'm just trying to figure it out.
Is it that of the dollar that they bring in, if 92% have to be used toward expenses? Is that where the 8% comes in? There's, that's what I recall when I looked into it.
And is that different than our NOI calculation, because it excludes or includes debt service?
I'd have to go back and look. I think it's just I think it's just O&M.
Okay.
It doesn't include those other,
Okay.
I believe, but I have to go back and look.
Okay.
Yeah,
Thank you.
Yeah.
On units that have been deregulated, are you able to share with us information that's more geographically specific than just at the borough level, either by community districts, community boards, other mapping?
Our current systems don't have that ability. That's part of the reasons why we're getting new systems. We can't break some things out.
Shayla, did you have more I'm just checking if you had more.
Yeah, so on preferential rents, it seems like that approximately 30% of tenants are having preferential rents. I know that your system is limited, but are you guys tracking if those preferential rents are, like, why they're increasing? Like, is there, like, did the same building have an MCI? Do you have, like, any, because that's 2% more than the previous year, which was 28. And so that seems like a pretty significant increase of tenants who are not paying the legal rent. And so for us as a board, I think it makes it sort of points to what the market is able to bear in certain buildings. And so I would like to hear from you all if you have any analysis of, like, what's happening in those buildings that is driving the legal rents to be increased, whether preferential rents are like actual tenants are paying, the rents tenants are paying, and the impact of all of that data. Or just provide us with the data and we can draw the impact ourselves.
Our systems aren't that sophisticated in order to make that sort of tracking. We would be providing speculation at best as to why there may be increase or a decrease in the number of preferential rents. That's what you're asking. It could be a variety of factors for certain owners, and we wouldn't really be able to give you an intelligent answer on that because we can't track that reason. Owners don't provide that specific reason as to why they may change the rents. All they do when they register the building is they state the reason for the rent change, and we could see it from the prior rent. This is what it was based on the preferential rent or legal regulated rent, and this is what it is now. So we really couldn't, we only be guessing really on that area.
Right now, you guys yourselves don't track that. It's self-reported by the landlord.
Yes, all registration data is self-reported by landlords, yes.
And so the backup for that, there's no backup. Like, they don't have to provide the actual leases or copies of leases so that you have you're actually tracking what tenants are paying, what the legal rents are. You're just assuming that the landlords are self-reporting the correct information.
Well, when a tenant challenges the rent or the lease, then we request the information from the landlord in order to arrive at a determination of whether it's proper or improper, whether there's an overcharge or not an overcharge. So in that case, yes, it's a formal proceeding, and we request information. We serve it on both parties, and each party is allowed an opportunity to explore and review this information.
And that's the number of the filed and granted and pending overcharges?
What number are you on? What question?
On question 1.
Overcharges filed.
So the filed overcharges are any new filings in only 2018. And you've already granted 426, and there's still a ton pending.
Right. So, yeah, some of these grants may be from prior years. I'm not sure if they're for prior years, right? Okay, so it may not be actually 2018 filings. We have a running backlog. We get to it first filed and then assigned, so, yeah.
Yeah, I mean, I think what I'm trying to sort of gauge is what buildings are being impacted by multiple areas or statutes that landlords can benefit from, like IIs, MCIs, vacancy bonuses, preferential rents. Like, is that all happening in one unit, or is it like sort of spread out throughout the whole? Like the whole housing market of rent stabilization, and I think that like helps us as a board be able, if we had data like that. I don't know if your new system will be able to do that, but I do feel like it's an important thing for us to assess, because we often hear tenants talk about MCIs, IAIs, and other kinds of vacancy bonuses and charges, but we can't actually connect that to like what does it mean in the world of rent stabilized housing as a whole.
I think one of the issues with some of the data that we just have in general is rent registration, of course, is self-reported. That's one. But then the other aspect of it is it's a snapshot in time. So what happens on April 1st may not be happening on June 1st of that particular unit. So we're not going to know until the following year what's happening. So I hear what your question is, but that's part of the issue with.
But I think the point is that it would be great to be able to track that change and to be able to see it as a board, to be able to make a determination. I don't know what will happen in Albany this year,
Right.
but I think that the likelihood that all of those tools for landlords are not all going to go away. And so if the board, we have consistently we assume why certain things are happening, and I think it's assumptions, and sometimes we're wrong, but I do feel like we should and need to get a better sense of what is happening in rent stabilized housing. And right now I feel like, yeah, we had a whole bunch of filings, but where are these filings happening? Are they happening in the same buildings that have MCIs? Are they happening in, like, maybe not as specific as what the action is, but maybe we know that 2 of those things apply to that building that actually impact like the overall rents. And I think that now that we have 30% of rents being preferential rent, I think that is actually really terrifying, as like we continue to have rent increases every year on tenants, even when the board has voted for 0% increases. Yeah,
Other questions from the board members?
I have a couple comments, clarification, and a couple questions. One, just to clarify, when you refer to rents in here, these are legal registered rents, correct?
That's correct.
Okay, so there's never an instance, so when you give the average of a rent, it's the legal, okay. The changes in your website that we've seen where you're reporting it online, have you gotten feedback, and Shayla or Leah can maybe speak to this as well, of whether that interface is working or not, and what you've seen in the first couple of months that's rolled out? I'm curious.
It's still a work in progress.
Okay.
We definitely received lots of feedback
Okay.
from everywhere, including staff. So there are still things that we are working out with our web designer and ITS. Certain things are not connecting, or they weren't connecting correctly, so it's still a work in progress.
Okay, all right.
I will say that from our organizing perspective, it's been easier to make certain processes sort of, we send everything certified return receipt. It costs us a lot of money to be able to do that for groups of tenants when we're organizing 30 tenants and 61 buildings for the organization where I work. And I think that I welcome more updates in order to make that process easier and more expedient.
And then just the number of units that have initially been registered in 2018 of that 885,205, that's a significant number in initial registrations, because I know it's a continuous file as owners register. And I know HPD has been working with you folks to bring in line the 421A buildings that never registered. Is that part of what's going on with that number?
Yes.
Okay.
421A and J51 compliance efforts
The
also.
compliance, okay. So that, it sounds like compliance is starting to catch up with.
It's
Okay.
in high gear.
All right. Well, that's good news. That's great.
Sorry.
Go ahead.
Just jumping off of that question, of the 885,000 or so units, do we have a approximate number of which are subject to the 421A program?
Yes. We can get, I don't know if that number's in here, but we can get that for you.
Okay. It might be.
Because there would be
may have overlooked it.
there would be initial filings with us.
Could be in here, in that.
Andrew, just a clarification on what you're asking about. I mean, I've worked with 421A buildings, one right around the corner from here, that we always did our filing from the day the building was built. So I think you're saying some 421A buildings hadn't filed or weren't in your system, not all.
Correct.
Just for
Yeah,
clarification.
correct. Oh, no, absolutely. I'm sorry, I didn't want to characterize that none of them were. No, I'm sorry if I meant, that's not, it was just found that there were a certain number of buildings that hadn't filed, and they're now going into compliance. Okay. And just for a general, a staff question, we're trying to find out if there were any state Mitchell-Lamas that came out of the Mitchell-Lama system. Other than the ones, well, and whether there was an agreement to make those units rent stabilized or not, or just simply that they are no longer a part of the program, and we just generally use that number in our housing supply report, and we were trying to get at that number. So I was just following up to see if there's some way we can get that.
Well, I'll check and see. I'll talk to our Mitch Lama folks and see.
Okay, that would be great. Thanks. It would just be for calendar year 2018.
Currently, you can't do this, but in your new system, will you be able to tell us how many buildings exited due to MCI, IEI's vacancy increases?
Buildings or units?
Units. Yes, units, sorry.
In the new system, I would imagine that will be one of the numbers that they can provide. Buildings don't exit because of those issues, but, apartments in and of themselves.
That's the law currently written.
Correct, as it's written. Ask us.
invite them to.
Yeah, this is just kind of an open-ended question, because I know you've given us so much data in your responses, but are you seeing any trends since we've met with you last year, anything that hasn't come up that seems new or different, better or worse, that you could share with us?
No, nothing major that's coming out, that's popping out.
Thank you.
Kind of consistent.
Thank you. So one thing that HCR has done that's been very helpful to the RGB in particular is sending some staff to attend our public hearings. And so I would just ask if you could do that again, we'd be really grateful, because
Already on the calendar.
I have to say there's kind of almost nothing worse than hearing all of these concerns and then not being able to tell people how to
Sure.
deal with them. So
Yeah.
we're really grateful for that.
Yeah.
Yes, the first time last year you were there, and it definitely was a help. People were there, and you,
Absolutely.
yeah.
Thank you.
Thank you.
I think so. Thank you. Thanks for coming here. Or
For Ms. Garcia's question earlier about harassment, yeah. Based on our fact sheet, number 17, which gives you a lot of information about harassment, it's defined as a course of conduct intended to force a tenant out of his or her apartment or to cause a tenant to give up rights granted the tenant by the RS Stabilization Code. An owner or anyone acting on behalf of an owner must not interfere with the tenant's privacy, comfort, or quiet enjoyment of the tenant's apartment. Interference includes reducing services or engaging in baseless court proceedings, and the Code Amendment of 2014 expanded the definition to include course of conduct, including filing false documents with or making false statements to DHCR.
Oh, I'm sorry, just one last question from Alex.
Yeah, you might have answered this with regard to Andrew's question. Number 2, in terms of the differences in the number of rent-stabilized units, the updated numbers are substantially higher than what they were reported before. I'm not sure I totally understand that. So 2017, there are 905,000 units versus 856,000 units under the previous accounting. And do you understand what I'm referring to?
Yeah, usually when owners are maybe late sometimes with their registrations, or there could be possibly amended registrations, it's basically rolling data pretty much. So whenever there's a run, the numbers could change from day to day, I guess, right? Or week to week, month to month, year to year, definitely. So that might explain some of it.
And also, I know they seem lower than like the housing vacancy survey estimates, and I'm not sure why they're so different. What's that?
It includes outside New York City.
The HVS.
These numbers are only including New York City.
Right. HVS is also just New York City. I think aren't they higher in New York City estimates?
Yeah, I mean, the HVS estimates 966,000 units. There's always going to be underreporting of everything. Anything that is reported, there's always going to be some, not just with HCR and owner registration data, but when anything's self-reported to any government agency, there's going to be some sort of underreporting because people aren't filing. Some may buy buildings not knowing that they're stabilized. I mean, that doesn't make it a legitimate reason, but it's not avoidance. Some may be avoidance that they don't want to do it. So there are a lot of factors that go in. So there's always going to be that HVS number, and isn't a counted estimate of what's going on as well. So it's simply what the owners have registered is what they're reporting versus what the HVS is trying to count up all the stabilized units that are out there. And like I said, there's
Which is based on the sample.
and there's no perfect system. There's always going to be some non-reporting. How much there is of that, I don't know, but I would always suspect that the registered units will always be lower than the HVS number.
Where's the HVS number from? It's Where do they get their data?
They try to use, and Danielle may be able to correct me or not, but they actually try to count the units in different ways. Part of it is using owner registration data, but they may go in and try to figure out the total numbers that should be stabilized. So they use different methods. It's not simply what the tenant answers the question when they go to interview. They're actually trying to count all those units using different sources to get to that number. So in that sense, they're counting them, but it's still an estimate. They can't. This is what they believe from all these different data sources that they can gather, that this is what the number is.
Okay.
So.
I think I would say that I think that there might be like, oh, I forgot to register those units, but there is a benefit from a landlord potentially not registering a unit for a prolonged period of time because of the 4-year rule, that you can't actually go back in an overcharge past the 4-year unless you can prove the landlord was intentionally committing fraud, which is extremely difficult to prove. And so we've organized in buildings where that's true. Like, they just don't register them because then they can claim that the rents are a lot higher in the period that they weren't registered. And so if you wait long enough and there's enough in the turnover and time goes on, it's like almost impossible to be able to fight any overcharge you think you might have.
Can the state respond to that, though? And that's your experience. Can the state respond to that from a statutory standpoint?
Could you restate the question, please?
Question. It was a statement.
The question revolves around, the question that I'm asking revolves around, if someone systematically doesn't register for a 4-year or greater period, and a resident brings a claim of an overcharge, is that somehow, because of some time restriction in the law or elsewhere, make it
It's
so
in the
that tenant
statute.
has less rights? I can't imagine that would be true, but.
I mean, the failure to register could be one element of a fraud claim, as you are describing. But if once the overcharge unit processes such a case and finds that the unit is rent stabilized, then the owner will have to file the legal regulated rent for at least the past 4 years.
So, but it's a maximum of a 4-year look back, right? Is that Shayla, is that you?
Normally, yes, but we deal with many cases of allegations of fraud, which will take us back beyond the 4 years. And again, the failure to register might be one of the elements of the fraud.
Tenants don't lose any rights.
Correct. The legal regulated rent will be determined if such a claim is brought, even if the owner did not register.
So if the claim got brought forward and they hadn't registered for 4 years, you could go back 10 years, 20 years, 30 years, whatever it would take to determine what the rent should have been on the apartment.
I mean, we've never had a case where we've gone back as long as you've just suggested, but
But there's two issues as to what
within reason, yes, you can go back as far. You can go back as far as what we may determine to be the last validly registered rent.
But just to be clear, so there's one issue of setting the legal rent, and there's another issue as to whether the tenant can recoup the overcharge? Are those two separate issues?
The recuperation of an overcharge is definitely limited to for their tenancy or just a 4-year period, nothing beyond the 4 years.
Mm-hmm. Is that yeah. Any other questions from the board? Thank you once again.
Thank you.
So I have nothing else.
Yeah,
So
so
just if
yes.
anybody wants to, so if we want to discuss or if we have any points that we want to make. Before we adjourn, I just want to open the floor for either reactions to the reports that we've received from the staff so far, or from testimony we've received from HCR, or I guess just HCR so far, or if people want to raise any kind of procedural questions about our business. We have some new members or substantive comments about our deliberations.
Just for those folks who are coming next week, on the tenant side, Leah, if you can get to me a list of folks who are coming by next Tuesday. For the meeting, yeah, coming up. I don't know where you're on with that. Oh, okay, fantastic. Great. Okay, good stuff. We're here all day.
I'm sorry?
We're here all day at this point.
Yeah, the
Tuesday
next
as a
meeting is a much
reminder.
longer meeting for the new members.
Yeah.
It's a kind of a very long meeting.
I have a procedural,
I have a
procedural question.
Oh, yeah, just if any, yeah, I'm sorry, go Scott.
My procedural question is just for the record, this is the second year in a row where owner member has not been present. All of the people who've been owner members have resigned with extensive time periods, have resigned in the calendar year before we've actually started meeting, and this position hasn't been able to be filled. It's very disappointing if this position is filled again the day of the vote, after all of the presentations have occurred, and it seems like we're on a path like that again. Angela Pinsky resigned in 2018.
I only heard the tail end, I'm so sorry.
I'm just putting into the record that this is the second year in a row that an owner seat has not been able to be filled during the board deliberation. And we're on a path once again that the seat will be filled the day before the vote. It makes it seem like a real shell game. Like you're just putting somebody in the day before the vote to make it optically look like the board is functioning with all the members. I'm just stating.
Hey, Scott, can you put your mic back on for a second? Yeah.
I'm just stating my concern that the administration, it's not anyone in this room, but this is becoming a pattern where somebody sits through all of these meetings, and there's going to be someone who's going to vote who's not going to have had that opportunity. And this is the second year in a row. I'm just stating it for the record.
Duly noted.
Other comments or issues, concerns, questions?
Might be helpful, I mean, it's not the right time, just
I'm sorry, Alex, can you turn your mic on?
the historic guideline analysis tables that you shared are very
Yeah.
interesting, but it may be helpful just to walk through what the column headings refer to. I mean, this may not be the right time, but just to be clear, we know what the tables refer to.
Sure. Do you want me to go through each one, or is there one in particular that you're looking at that?
I would say the first one in particular. the
Okay.
change in- Just, I think I understand it, but I want to be sure.
Sure. So,
That's a summary, basic summary.
sure. So what we're taking a look here in this particular one is some of the key things that we take a look at in terms, we consider the price index, and the core price index is also change in NOI from year to year, and we're looking at CPI as well. It's just different indicators that the board has traditionally used since not all of them go back to 1969, but certainly the price index does. And just sort of say where the guidelines came out historically. What have other boards done? You can take this information, obviously situations change from year to year, and certain numbers may look the same and the board may come up with a decision that's different than what this board, but just it gives a historical perspective of what the board has done over that time period. So the first column is just the change in the price index. That, over the years, it's been done since 1969. And we're just taking a look at what it's done, the percentage point different from the prior year of what's going on between the price index. The core PIIC, which we've calculated from 1982 going forward, what that is. The change in NOI, that is something that's in the I&E report. We take a look at that. That's why we can only go through 2017 on this particular table. That's the last year of data. We look at CPI for that time period as well. And then we go into the different order numbers and what the board actually determined as renewal lease adjustments for those, with those numbers for those particular years. So this table was requested, we started doing this in, I guess, the 2000s, so it just sort of gives a historical perspective of what's going on for the members of the board. Some find it useful to see, but there, like I said, there's different environments that the board creates guidelines from year to year. So, but it's just a way to maybe look for some guidance.
Alex, am I understanding that you're also asking a more concrete thing? Do we need a legend on the bottom?
No,
Or-
I
that's
just
good
want to
enough.
be sure I understood.
Okay, got it.
I think that's fine.
A similar situation we're doing with the hotel. This is the hotel data that we have. Really, it's just the price index. That's specific to hotels. You can use some of the other data if you'd like, in terms of, the I&E and things like that. But the hotels, it's pretty much the price index is what we have. We're working on a memo that will update the registration data from HCR, which will give some information about the number of units and rents. For hotels, we'll get that to you. Hopefully, we'll send it out before the next meeting. If we want to have some discussion about that at the next meeting, we'll find some time to do that. So that's some hotel data. We do the similar thing for lofts, what's going on with the loft price index and what the guidelines were. Just to look at the projections over time and what the actual price index was. So again, it's just a historical perspective. The next table, about a 3-year average, that was developed again in that time period. A couple of board members requested just to take a sort of a 3-year snapshot, what's been happening over that time period, and the averages. Again, some of the key indicators the board looks at, like the price index, the core price index, the rise in I&E costs and income. So you have costs and income there. And just sort of take a look at that. And if you took those particular averages and put them into the commensurate formulas, what kind of guidelines would you have?
Andrew, could you share that formula with us?
Yeah, if you like.
But for the 1 and
Yeah.
2 year? Yeah, that'd be great.
What is the RGB rent index impact of board's guidelines?
Yeah, right. So once the guidelines are done, we take a look at the mix of 1 and 2 year leases, what's going, how many people are renewing and how many 1-year leases, how many are renewing 2-year leases, and how many vacancy leases that are being signed. So we have a formula that looks at, okay, so what should the impact of all of that be on rents, just from what our board does, and that's what that index. So we're saying that there's a certain percent that we can expect rents to go up if everybody renewed at our guideline,
Okay, thank you.
And that's a sort of an estimate of what the impact will be.
Any other questions or comments? Do I hear a motion to adjourn? Do I hear a second? We're adjourned. See you all next week. Thank you.